Well, Justin, we saw a bit of weakness on Friday afternoon with the rand well above 730. Were we looking at global factors here? Were there also local factors pushing the rand weaker?
Yeah, it's hard to sort of disambiguate what actually happened on Friday, but the big news on Friday, the way I see it, is talks by the European Central Bank to perhaps extend quantitative easing. And those comments came from the arch-hawk of the European Central Bank, Axel Weber, which I think where it came from is as important as what he said. And his admission that interest rates are staying low for longer put the skids under the euro, and the rand went lower to about 736 as a consequence. And at the same time, we had the strikes in South Africa, and we saw quite a lot of talk out of London about the strikes, and that possibly also drove the rand weaker.
Is this something new, the strikes helping to drive the rand? Because, of course, at the beginning of last week, it really was global factors driving the rand. Do you think international investors are now looking at the local factors in South Africa as well?
Well, it's interesting. Friday was the first time that London players that I speak to spoke to me about domestic factors and specifically the strikes, which were getting quite a lot of press in London and globally in the States. So yes, I think possibly domestic issues are on the agenda for the first time in quite a while. So that is a dynamic we'd have to watch out for, yes.
Well, Justin, of course, you mentioned the rand at 736 on Friday. This morning it was down around 728, 729, currently at 730. Of course, we have had news this morning that HSBC has proposed buying 70% of Nedbank. Do you think we're seeing a relief recovery for the rand today, or do you think the Nedbank news is also helping to drive it stronger?
Yeah, I mean, all I can comment on is from a sentiment point of view, it's extremely rand positive that an international bank of the stature of HSBC should look at buying Nedbank. And further than that, we don't know the dynamics of the inflows. So at the moment, yes, it could be driving the rand stronger, but it's a long road to go. We've only just opened discussions on that.
Are there any ideas that at this stage of how much would come into South Africa? Of course, you said you are trying to work out what the inflows could be. We know Nedbank's market cap around 70 billion. Might be a little bit of a premium on that. Of course, Old Mutual would want to take some of that money back out of the country. So is it really all just speculation at this stage?
Yeah, absolutely. It's way too early to tell. What has been announced on SENS is about all we know from the Nedbank side. And it's only from an outsider that I can judge the positive effect on the rand, but further we can't say at this stage, no.
Just taking a look at some other local factors that the market might be looking at this week. We have second quarter GDP numbers out tomorrow, of course. First quarter, we had the economy growing by 4.6%. I think the market's expecting something a little tamer for the second quarter. What's your view on that, and how might that drive the rand?
Yeah, we're expecting a bit of a slowdown to the 3.6, 3.1, depending on if you're looking on a quarter-on-quarter or a year-on-year basis. But I think it reinforces the one of the pillars that the Reserve Bank is targeting for exchange rate targeting, and that would be growth in the economy. So if we have lower GDP and perhaps tamer CPI on Wednesday and perhaps lower PPI on Thursday, that would all count towards an interest rate cut the following week on Thursday, the 9th of September, which we at the moment are picking.
Justin, what's the short end for us telling us? Is the market pricing in a cut at this stage? What percentage of a cut?
Yes, indeed. The market is saying we've pretty much got 60 to 70% chance of a cut at the moment. And we are backing a cut for next week on the 9th of September. That's correct.
Taking a look at the longer end of the market, perhaps, because we had huge interest, or huge foreign interest rather, in our bond auction last week, and those foreign flows into our bond market still continue unabated. Are we still seeing that strength coming through?
Yeah, very much so. That's probably the macroeconomic trend of the year. The huge volumes of flow into the bond market. Upwards of 100 billion in the last 2 years since the 2008 crisis, and probably upwards of 60 billion in the last 3 or 4 months. That has driven down the entire curve, especially the long end, the 186 long end, and the foreign inflow, particularly in the 208 stock, which is 10-year stock, and that is very, very positive for the rand, and it's probably a feed-off cycle. Strong rand, strong bond market, strong bond market, strong rand, and The problem with those flows is, of course, they're quite speculative and they could be reversed.
Do you think if we did have an interest rate cut next month, we could start to see some of those flows being reversed as that interest rate differential narrows?
I don't think the interest rate differential itself is the issue, because we still have a very strong positive carry. I think the worry would probably be of a double dip nature, where the pullout came from the internationals on that basis.
Justin, the rand from these levels back at 7.30 against the dollar, would you expect it to remain in this range pending some positive news flow or negative news flow in that case?
Yeah, I think the rand is probably pegged at around these levels at the moment. Possibly the longer term trend of strong rand will only be reinforced if the euro does jump to the 130, 131 area again. It's sitting around the supported 127-ish at the moment.